India Today Group's global business editor Udayan Mukherjee spoke with market guru and CEO of Avendus Capital, Andrew Holland, about the current optimism on Dalal Street. Here's an excerpt.
What's the general mood on emerging markets you sense, Andrew? Because, there's been a very good comeback with FII flows into India. I hear that it's reflected in other regions as well. Do you think this was just an unwinding of the very, very tactically underweight position earlier, or is it something more than that?
So we spoke about this last time in terms of the kind of thinking towards emerging markets. So it all boiled around when the Fed would go on hold, and the critical factors for us was two actually. One is unintended consequences of higher interest rates, which we've seen through the banking system in the US in regional banks, and two would be heading towards recession, which even the Federal Reserve chairman is now saying that that's the likelihood. So all of that means that the Fed has now gone on hold in our view, and will reduce interest rates by the back end of the year. Now, for Asia in particular, in emerging markets, obviously, if you take into account that slowing down of the economy very sharply, it would probably mean that oil and commodity prices will fall, which gives the Asian emerging markets, in particular India, the opportunity to kind of reduce rates even before the Fed does. So I would expect the RBI should, I'm not saying it will, but they have the ability to reduce interest rates by 25 basis points in October of this year. So when investors look through this and say, okay, we know we're going to recession, but we'll look through the recovery because interest rates will fall, emerging markets is still where you're getting growth, so we want to go there. And initially, we'll look at those exporting countries like China, Korea, Taiwan as the initial phase of putting money into the markets. And India comes in the second half of the year, i.e. from October onwards, as that acceleration of our GDP growth and earnings start to happen as well. So I think that's why we're seeing flows. It's coming into emerging markets. We're getting some share, but it's not to the full extent that I would expect, which will happen in the second half of 2023-24.
The last few discussions we've had, Andrew, we've spoken justifiably about the global risks, because these risks now seem to be global in nature more than India specific. But as we get to the end of the year, with the period that you're talking about, October, November, we get into election season in India as well. There was an election result in Karnataka this week, as you know. But do you think elections are a risk for the market, or some kind of a trigger which the market will respond to as we wade into 2024? Or do you think global factors will continue to dominate the discourse?
So I think before we get to May of next year, Udayan, I think there is a couple of risks, both for India, internally and kind of externally. And I think the external risk is, with interest rates having been risen by another 25 basis points recently, and the fact that there's a lot of there's a credit crunch going on within the banking system in the US, that's like adding another 50 basis points to your interest rates. Effectively. Now, if this spreads from the banking sector to the commercial real estate sector, mortgage market, that's a very big problem for global markets. It hasn't happened yet, but it's an unintended consequence of what could happen. And I don't know if you remember 4 or 5 months ago, I can't remember which fund it was. There's a couple of property funds who had to stop redemptions because of obviously people trying to redeem. So that's maybe was a kind of a trail of what might happen if it starts to go to the commercial real estate. So that's one risk. El Nino obviously is a risk for India, because that would obviously push up inflation significantly, and that might just put the RBI on a pause for longer than I would hope for. So those are the two risks. So before we get to the elections, I think those are the two things to watch out for. With the elections, I think it's a little bit early to call it now, but obviously, with the Karnataka election results, I think everyone's saying, and maybe rightly so, that state elections are different than national elections, so nothing to worry about so far.
So what do you expect the market to do now, Andrew? Because it's been a very smart comeback from the Nifty levels of sub 17,000 all the way to 18,500. From here on, though, do you see the market making significant progress, or do you think the easy money has been made for 2023?
I think for this calendar year, yes, probably we're going to keep in a range, and it's going to be volatile because of some of the risks we talked about. I also think that you've actually made more money below the Nifty in terms of the themes that you might have played, and I think that will continue. But let me put it this way: I think the Nifty could be hitting 20,000 by March of next year, which is about another 10% from here. But I think themes underneath the Nifty will actually do a lot better. So I think that's the way I would think. I'm not kind of saying that the index is going to shoot up, but if you're thinking about interest rates coming down in October in the RBI, then the banking sector would obviously be a theme that you continue to play.
If you like the video, do like, comment, share and subscribe.